Hey folks, this is Clayton Collins, the CEO at HW Media, your host for the Housing News Podcast. And today I have one of my favorite guests that I've done a lot of content with over the years. We've done a lot of Facebook videos. We've done a lot of video interviews on his platform and ours. We've done a couple podcasts. Today's guest is Dave Savage. Dave Savage is the Chief Innovation Officer at TrustEngine and the co-founder of Mortgage Coach. I know he's a familiar name to many of you, but this will be a different conversation. I'm sure you've consumed some of his content, and I wanted to make sure that we brought a fresh face and a new angle and a new side of Dave's expertise to you. Today, we talk about some current market dynamics. We talk about how some new loan officers don't get it and how the seasoned ones forgot it. That is a great phrase that I think Dave initially shared on a podcast with Tim Brahim. We go into dissecting the modern sales process and building trust and the type of information that loan originators should share at different points in the loan origination process. We all know that education attracts and that sharing information and economic information helps borrowers better understand the housing economy. But there's also language and information that's just too much. In this conversation with Dave, I got really energized and finished recording and kind of left the week on a high. And I hope that you enjoy this conversation and leave this podcast on a high as I did. Enjoy this conversation with Dave Savage, Chief Innovation Officer at TrustEngine. Dave, there's some guests when you have on a podcast, you have to go like scour the internet. Like who is this gal? Who is this guy? What are they all about? When you scour the internet for Dave Savage, there's a lot of content, man. And recently you've been on the circuit talking to a lot of different folks in the industry, different podcasts, different media outlets. And I'm thrilled to have you on today, but I'm going to mix it up. We're not going to have the same conversation about the PR press release of all the deal making you've done in the last year, which has been fun to watch, to tell you the truth. But I want to kind of mix it up and learn more about Dave Savage, the man, and dig into some of the knowledge that you have built in your years building Mortgage Coach. Does that work for you?
Oh, it totally works. And thank you. You guys have really helped us put a microphone on some of that news that we're rolling out. So grateful for that, and to your whole team, Clayton, and let's go wherever you want to go.
I think I can share with the audience now when you guys rolled out the new TrustEngine brand about 6 weeks ago. I got the chance to get the early preview 7 or 8 weeks ago and get a look under the hood at what this combination of Mortgage Coach and Sales Boomerang was going to be in this borrower intelligence platform that is TrustEngine. So we'll talk a little bit about that, but I want to kind of start off as I prep for the show. I did listen to some of the other podcasts and video content that you've done in the last month, and two conversations really stood out. There was an amazing interview with you and Alex and Dave Licken, and then an awesome conversation with you and Tim Brahim. And as I've shared with the audience before, my background is an M&A deal maker, and in that conversation with Tim, you really dived into the entrepreneurial journey of building Mortgage Coach and different deals that you have been presented with over the course of your time operating. And I think one thing that often gets forget in M&A is the hard work happens after the deal is announced. So tell us about remind me of the date you closed on this acquisition with LLR Partners, and tell us about what the experience has been like for you as an entrepreneur and operator, kind of fitting into a different role as a leader.
Yeah, it's a deal. I mean, first of all, it was a deal I've worked hard on for a long time. Being the co-founder of Mortgage Coach, and there were some deals that didn't get announced, that didn't get to the finish line. But the date is Christmas Eve. I mean, I'll not only never forget the date because it was Christmas Eve, but I can even picture the house. My wife had gone to run an errand. My son, we were in the living room, and we were kind of having the kids over, and we had the Peloton in the living room, so we had taken it out of where it usually was. He was on the Peloton, and they have that closing meeting, and boom, it closed, funds wired, within 15 to 20 minutes, and it was thrilling. It was a really, as an entrepreneur, it was a magical day.
I think most people who have never bought or sold a company, don't know how kind of special yet underwhelming that closing meeting is. The first closing meeting I was part of, I was like, wait a minute. We're just getting on the phone with like 12 lawyers and they're saying doc one clear, this sign. And you're like, this is supposed to be special. Like, where's the champagne? Like, did you feel that feeling?
Well, I had expectations set with our banker, Dave Groves, Vaquero. Thank you, Dave. If you're listening to this, David, if you hear this. So I knew what I was getting into, although it was, the amount of money that goes through deals that's getting wired and how it was. But I thought it was really cool, cause I had some expectations set, but yeah, no one is like, hey, great job, Dave, it is a bunch of lawyers, investment bankers, sellers, clear, buyer, clear, but it was fun. That was part of the memory, is just how practical it was, but also how thrilling it was at the same time.
Yeah, that's funny. I know every deal is different, and the wires are big. But I've just always thought it was funny that there's not like confetti dropping from the ceilings when that when that call ends.
We did some cheering at home. Like we didn't have confetti, but there was a lot of excitement.
Very very nice. Okay, so Christmas Eve you closed, and February 14th there was a new brand rolled out. 14 months later. So let's talk about that period. And you're like not just selling a business, but you're also combining it with Sales Boomerang under this shared new sponsor. How's the evolution been for you as a leader, as you or at least what it sounds like, get to spend more time on the stuff that gets you most excited?
Yeah. So we definitely knew that we were the synergies of having LLR, having a great capital partner who also has a lot of strategic value, but merging the companies was part of the thesis of the deal. Now, how fast we would move them, would we kind of have, you know, two companies operating as separate brands in the industry and not come up with TrustEngine? And by the way, the word TrustEngine, those had not come together, and whether or not we would operate under another company or not, those things hadn't been decided. So, what we did know is that we had the leading platform of data in mortgage and housing. We had the leading presentation. And we do think, in this digital age shift, I think we came up with the sweetest thing, peanut butter and chocolate, being like this really special technology platform. But that was it. It was conceptually that. And then, as we started digging in, we're like, oh, efficiencies. Of course, we're going to integrate, people, HR, and accounting. Yeah, that's a no-brainer. And then, well, sales, sorta, but maybe we should have a mortgage coach specialty sales group in a Boomerang. But, the more we got into it, we're like, no, we need to integrate these businesses. We'll go faster. We'll create more ROI for our clients. It will be better. But those things are never as easy as you want them to be. And while the product part of integrating these partners has been magical, we feel like we've got something really special in the market. The people side of that is always tough. And then we are also coming into a really difficult, brutal marketplace, which, brings opportunity and it also brings struggle.
Absolutely. So as you went through that first year after the acquisition, and that the mortgage industry is, certainly not is used to seeing lots of M&A. The prop tech and fintech world has been pretty acquisitive. Did you hear anything back from your clients that they came to you and said, Dave, I want to make sure you maintain this because it's really important to us, or any concerns or opportunities that clients were voicing to you as you went through this integration process?
Yeah, no, it was just extraordinarily positive. We have both companies had have great relationships with our clients, and they were happy for us. Yeah, I can't recall anybody like, hey, I want to make sure this. Obviously there became questions. Are the contracts going to change? Very clerical things, but but we were driving those conversations. Those weren't from the marketplace, and everybody was fired up. I mean, Sales Boomerang had built a really great brand, had a lot of recognition when we had talked to people, and they were excited about it. And we had a great brand, and the Boomerang people were excited about it. So that part of the transaction was just awesome, and no gotchas or issues.
You mentioned the rich amount of data that you have in this combined business. And that was one thing that stuck out to me in the interview with Dave Licken. Alex talked about how there's not just data on like the marketing and sales process, but also like which loan officer might be most effective for different types of loans. Can you go deeper into the data you're referencing and like kind of specifically, like what have the two businesses been able to aggregate over time, and how is that activated today? And is there a vision for how that activation evolves?
Yeah, well, I mean, we do think the way the mortgage industry, we think everybody in mortgage, like there's no one in mortgage that is a peer to a Target or a Facebook or an Amazon or an Apple, or you name a big consumer brand outside of mortgage that is like, wow, they're really using data in a very profound and almost disruptive way. Like there's no one doing it. So I think at this point, what we've learned is the ocean is even bluer than we thought, because the industry is just in this data trigger 101 phase where, and so we're in beta, with some big players to, figure out how to roll up and roll out some of these other concepts that, are applying practices that work in other industries in the mortgage. And that part of our business is in beta. And we're on a very selective basis, inviting, clients that are already using both Mortgage Coach and Sales Boomerang. Like we decided that in order to innovate, they needed to be big enough to have the resources to innovate. And they need to already, really respect and understand both Mortgage Coach and Boomerang. So, we're in beta on that part of the business. But I would just say, personally, kind of sobering just how far behind our industry was. Like I knew as an innovator, like wow, there's a lot of opportunity to really do something different and profound. But it's exciting.
This, you mentioned the market we've navigated over the last year and kind of this wild drop off in volume as we've seen rates rise and inventory constrained. One of the hopes for a slower market after 2021, the first quarter of 2022, is that people would have time to focus on implementation and innovation in their business models. Are you seeing that in the lender sphere right now, where lenders are prioritizing how can we build better, more efficient business models, or did the change happen too fast?
Yeah, well, I think where we're at in the market right now, I can't remember what interview who brought this up. I think Garth Graham. Anyways, because I've interviewed so many people, but like we're by 2025, there's going to be the haves and the have-nots in lending, and we're already seeing some companies acquiring companies, and you're starting to see those haves and have-nots, and the haves are investing. Like they are. We're still adding new logos at a pretty successful rate. We're still growing clients. It's pretty exciting, but no, there's less people that are pulling back that are not investing than people that are. Now that's always the case, but I do think in this market right now, like the line is being drawn. Who's investing now? Is it going to be too late if they? I get Q1 of 2023. Like I get being super conservative, and maybe that's not the quarter that we're going to roll. But I have been a little surprised at the industry not being more proactive and really like when something makes sense, driving it. And then I'm also surprised that lenders, but I've always been surprised that lenders don't bring more leadership to the sales force and don't, I don't want to use the word require because we are an entrepreneurial industry, and I do not think like you need to require people to, dot here, cross here, dot there. But we should be using the same tech stack, and we should be driving best practices more aggressively than we are. in the industry.
Yeah. So, I mean, you've seen a few cycles, Dave. Like, does this feel like, do you think the surprise is warranted, or do you think like we should have like known, we saw, the SNL crisis, we saw the dot-com bust, we saw the great financial crisis. Like, was the behavior pretty similar in those periods where the investment wasn't, wasn't, people weren't focusing on the future, but just focusing on like, all right, how do I navigate this sticky situation the industry is going through?
Well, I'm now entering my 38th year in the business and have, done this for 37 years. And I have always said that every time it's shifted, not my first couple cycles, but when it does shift, it's always more violent and more painful than you could have ever anticipated. And so I stand by that. And every time I've seen a pivot in the market or I've seen this, it's always, it's coming, but you don't realize just how fast and just how brutal it is. But again, when you see how fast rates, have gone up, it's historical. It's like, could anyone have anticipated that? No, I don't think so. I mean, I'm sure someone could have, but I can't say, hey, the industry could have done that. And at the same time, when you have the kind of demand that the COVID bubble created, 2020 and 21, like, of course, lenders are going to scale. I do think the big lesson, though, for lenders is, have scale and flexibility in the model. The industry, we've been doing this long enough to know that it goes up, comes down. It's a roller coaster, and we need to use technology so that we can scale. The only lesson that hasn't been learned yet is the power of database. I'm still surprised that more lenders don't really make their database, just like, this is a core, strategic, valuable piece of our business. And no offense to loan officers, but loan officers have feet and they can move. And so I think lenders, they put more priority around loan officers than they do around data. Now we're a people first business. And I'm a people first entrepreneur, but I just feel like there's a lack of priority for loan officers. And I talk about this all the time in my interviews, that, they're too busy chasing the new deal and not focused on database. That's the only thing that surprises me, that our industry still doesn't put enough priority around data.
Hi, this is Sarah Wheeler, Editor-in-Chief of HW Media, and I'm talking to Ed Messman, CEO at Rook Capital, about their shared value investment program. Ed, how is Rook Capital creating new homeowners?
Yeah, the shared value investment that we created helps prospective new home buyers by adding up to 25% to their down payment in exchange for an equity position in the house. By doing that, you effectively lower the monthly cost of homeownership to a level that's affordable and within their budget.
Thanks, Ed, and listeners can find out more at rook.capital.
The database should have long been a strategic advantage for depositories, like having the sticky relationship of the consumer checking and savings account and all the other cross-sold products, and that captive audience. Yet depositories have kind of whipped in and out of mortgage just as fast as the whiplash we've seen in the independent mortgage bank ecosystem. So I wonder how much of maybe it's not using the data the right way, or not being committed to the product, which might be kind of more the depository factor there. But have you thought about that, like how data and customer relationships differ across the IMB and the depository business models?
No, yeah, of course. And we have a lot of the depositories and, are trying to bring on it. But both housing is so transactional in its focus. I mean, when you really look at how the technology stack is built, it's built around being able to take a loan through a loan manufacturing experience that's compliant and that can be sold on the secondary market. That is how our industry and that's how our tech stacks are built. They're not designed around a consumer experience. How do we help a consumer make an informed decision? How do we help a consumer get into sustainable debt? And there has to be a balance. So, I mean, of course, it has to be compliant. Of course, it needs to be saleable. But I do feel like both depositories and lenders, if they could elevate, okay, we got to have a great transactional platform, but if we got more consumer first, like we created a consumer first experience, let's just say there's a massive opportunity. And again, we're going to try to help lenders do that, deliver more personal value, and turn it into a competitive advantage. Because I don't think depositories are doing it. I do not think IMBs are doing that. I don't think anybody in lending is really doing that, aside from very specific loan officers that are very, high touch, high tech. You do have some loan officers delivering the model of the future, but you really don't have lenders doing that at scale. But that will change by 2025.
As lenders learn to implement the tech and use the database the right way, how does that change the relationship between the lender and the originator? Do you think there's a stickier relationship or a less sticky relationship? Like if we're going to really fast forward 10, 15 years into data evolution, like how do you think that relationship evolves between the employer and employer?
Well, I know. I get text. I got a text. I think I put it on LinkedIn a couple days ago, where a loan officer was leaving a company. And I'm not going to just say this because it's self-serving, but it is. They said they were texting someone saying, "Hey, I have a new opportunity, and I want to work for a mortgage coach culture and company." I'm not making that up. It happens. But my point with bringing that up right now is I do think that when lenders really turn data into dollars, and they really have tech stacks and a culture around a tech stack, it truly helps a loan officer make more money and have a more consistent business, and you do that through data and technology. Like they're going to recruit loan officers more easily, and they're going to retain loan officers more easily, because the loan officer is going to think twice before switching. Like right now, what keeps loan officers at one company is, one, the pain of switching, and two, the quality of their direct leadership. The culture and leadership. Like those are the two, avatars that drive people to move. And of course, pricing matters. But let's face it, loan officers aren't just chasing, I need the lowest price, because price is, it's always changing. It's like a falling knife. But I do think, for the lenders that really get the tech stack right and they build cultures around that, they're going to be a magnet for talent, and talent will be less likely to move. And talent will have less options, even if they, aren't completely happy.
Yeah, that's interesting. So building the culture around tech, I think, is a topic that hasn't had enough light shined on it yet. And I think one of the things that you talked about in Tim Rahim's podcast is that some of the new loan officers don't get it. They've been in this hot refi market where business was pouring in for the last several years, and the seasoned loan officers forgot it. So when you think about another haves and have nots, another bifurcation in the market, these two different categories, how do you build a culture around data and technology for loan originators that actually is, next century facing?
Well, the part in that conversation with Tim, which, by the way, great podcast, shout out to Tim for a great interview. But I was really speaking to creativity and curiosity, and we are in a market. And I do think, I think that this is not just another year in the mortgage space. I think when $8 trillion in mortgage debt was done, and the rates 2% and 3%, and I personally think it's unlikely that we're going to see 2% and 3% again. I hope we don't, because if we do, there's some really bad things happening in our economy.
Oh, Dave, that's a tough prediction. I've been pounding the table. I hope we never see that again, because it means we're in quarantine, lockdown, global pandemic, World War III. Like you're basically calling for a bank crisis if we see twos again.
No, we don't want to see that again. So, but by the way, 63% of every mortgage in America today starts with 2 or 3%. And so this kind of refi, like for 37 years I've been in the business, purchase is North Star and the avatar, but there's always like this refi business that comes and goes. Like, it's not going to happen. So you need to be an advisor. We're not in this, vanilla and chocolate market that we've been in, where it's just really simple. And it's like, oh, do you want the 30-year with no points or the 30-year with a point? Like seller buy downs, 2-1 buy downs, points versus no points. There's just a lot of strategy involved and creativity involved. And I think I said the new loan officers, they don't know what they don't know. And experienced loan officers forgot about advice and creativity in lending. And so now the cool thing is technology, mortgage coach, home bot, there's a lot of, strategy that can go into helping a family make a better decision. And I do think that there'll be have and have not, mortgage professionals that are great advisors, that are data driven, will absolutely take market share from those who aren't. And by the way, that's happening right now. Like market share is shifting in the space. And I'm seeing it. Like I've interviewed loan officers that are actually not down. Denise Donahue in your backyard, she had a great year last year. I mean, she closed like over 700 loans.
I've met a few originators here in Dallas who are on track for record years, and there's a different approach. There's a different strategy.
They're data-driven mortgage advisors, and they're also using social media. They're building brands. They're leveraging this new era that we're in.
Yeah. So just last week we dropped our 2023 Real Trends rankings for the top real estate brokerages and franchises, and continue to see the trend of consolidation of market share. And I think when we drop our agent and team rankings in a few months, we're going to see that same consolidation of market share to the best and most productive. We've talked a little bit about this this thesis that this isn't a market built for dabblers. Nobody needs advice from a part-timer, and the industry can be better for flushing out some of the part-timers. I haven't seen the data yet, but we're sensing the same thing happening on the loan origination side, not just a consolidation of market share with certain top lenders, but also a consolidation of market share with the most productive LOs. So let's talk about what you're seeing with some of the most productive LOs. And Dave, you've pounded the table on the value of financial education and how knowledge attracts, and using knowledge in the sales process. Can you, for someone who hasn't started that journey yet, like where do they begin? Like where does the LO begin with taking steps toward doing the activities that the true top originators are doing?
Well, I am going to selfishly plug our YouTube channel. That it is a great resource to hear from loan officers that have made the shift, and they're what I call data-driven mortgage advisors.
This is the new TrustEngine YouTube channel.
Well, so we have two channels now. So we're keeping Mortgage Coach, Netflix for loan officers, loan officer best practices. I'm interviewing loan officers that are, they've made the shift and they're doing things the right way. And then the TrustEngine YouTube channel is going to be executive leadership. I'm calling it Modern Leadership for Lenders, and I'm hoping to get you on there and do an interview with you. But I'll be interviewing CEOs and industry leaders, like Clayton Collins, and I interviewed Steve Jacobson from Fairway. That should, I think, go live next week. And then I'm also going to interview people from outside the industry. But to answer the question, I mean, I have built my career, and everything good that's ever happened to me, it happened from mastermind. It happened from best practice sharing and learning from, people that I like to be around, people that are willing to be transparent with, what's working for them. And to me, that is what you need to do. Whether you're watching this and you're new in the business, whether you're super successful in the business, I think, and I love what you do. I mean, I know that doing that type of peer group learning is really foundational to you. But that's how you do it. Every market changes, and again, you do want to find people that are growing and evolving, and they're going to be in the haves, because there is a have and have nots. And then I also think we need to learn from outside the industry. You do need to think about how does Amazon use data, and what can we learn? It's one of the reasons why I love every time I get on the phone and interview Scott Brown, former futurist of Intel. Like, I'm learning, like, hey, this is how we need to evolve in housing to crush the future. By the way, you should have him speak at one of your events, Scott Brown.
Speaking of event speaking, we actually have Dave Licken speaking at Gathering of Eagles this summer. We saw last year, we saw just a massive increase in interest from the real estate brokerage audience and core services across the board, mortgage specifically. And we're starting to see some brokers like launch mortgage brokerage shops and even look at some M&A. So Dave's going to talk about M&A in the mortgage industry and try to educate that other side of the audience. Did I hear in his podcast that you and him are in a mastermind together?
Yeah, we've been in a mastermind. It's called 7A, and Alex is in it, Boomerang and Mortgage Coach. But we've got I don't know, 7, 8 leaders, that we all sell fast technology to the mortgage space, and we've been meeting for years. I mean, I don't even know how many years, like 4 or 5 years. We did an on-site outside of Austin. I can't remember if it was early 21 or late 2020. It's called the 7A group. But yeah, we've been in a mastermind for quite some time together.
All right, very cool. He's a smart guy to learn from. I'm sure there's some other smart minds in that room.
Oh, I mean, it's awesome having him as part of that group.
Cool. So let's bring it back to the originator for a minute. I really do want to, kind of start at the ground floor on best practices you've seen in knowledge sharing. I know you're very active on social, Dave, and I see originators like taking completely different approaches to educating their sphere of influence on what's happening in the housing market. Are there any kind of best practices or even like worst practices like that you see and just make you cringe and wish you could coach that person on how they're sharing information with their sphere of influence? And you watch some of this originator content on Instagram and TikTok. I say TikTok. I'm not even on there. I don't even look at that, but on Instagram. And ultimately, it comes across that some of these originators are the first point of home ownership education that some of their audience members are getting. So it seems like a really important thing to do right.
Yeah, well, the worst practices are not having kind of a playbook that you're delivering a consistent experience for a family. And unfortunately, I do think the majority of originators don't have a playbook. It's spring home buying season. I don't know exactly when you're going to release this podcast, but I mean, this is like the first inning to spring home buying season right now. And it's a 9-inning game. And it is the game when it comes to purchase business. So we're in a purchase market. We're in the first inning of where 70% of all mortgages will be done in America. So having spring home buying playbook in this spring is different than last spring, and that spring was different than the spring before. Like literally, maybe no, even 2020 and 21 were different because 2020 is when COVID just hit, and we were, like it was very different than 2021.
We were frozen. If we did this conversation in 2020. Those birds chirping in the background would have, no, I hear the birds chirping, but like if we did this in 2020, the market, we would have been talking about our loan originators an essential service, our real estate agents allowed to host open houses. That would have been what we would have been talking about 3 years ago.
Exactly. So like literally every spring home buying season has very different nuances. And, the only thing that's for sure is it's the same time, it's January, February, March. It's March. And so it's the same time of year. And every year, I'll leave it to you to do the data, but I think it's like 70% of purchase transactions take place between, these 6-ish months. So this year, the trend you're seeing is that loan officers have bigger sales funnels. And, it's not like people are just like, oh, I'm getting pre-approved and got a house, between the inventory issues and just the uncertainty people have, like, are rates going up? Are they going down? Are values going sideways? Are they going down? Like, there's, I interviewed Jeremy Forcier. He's got like 1,000 people in his pre-approval funnel. People that he's pre-approved, they qualify, and they don't have a home. Now that's not just the 6 months worth of things. I mean, that's his perpetual pre-approval funnel. So I always say, like, in this market, have a funnel. Make sure it's monitored. Of course, it should be monitored by Sales Boomerang so that you know whose credit's going up, whose credit's going down. if they're double apping you, you're able to be strategic. I don't know if your social media feed got filled up with date the rate, marry the house, divorce rent, but that's still a thing, because the NBA is predicting rates to go down to, I think 4.5 next year. And then there are some people in our industry who say they might go to 4.5 this year. I mean, I don't know. That's not the space I'm in.
I fully believe in that concept, but I think so much comes down to delivery. And now what I'm seeing in my feed is agents kind of making fun of themselves. Some of it making fun of themselves. Like, is this really consumer friendly content? But saying like, oh, we've been telling you it's a great time to buy and a great time to sell for the last 6 months. So which is it? And it's a lot of mixed messaging out there.
Well, the three words, I already said the word creativity and curiosity. And the third word is empathy. We need to have empathy, and there's no doubt. I think our industry is very guilty of rent shaming. I think our industry is very guilty of, selling, yelling at people, about, renting versus owning. And so I say empathy, when you have those conversations, it's always with empathy. It's always with curiosity. I think we all should be humble enough to I don't know what the future has to hold. I know what the past data looks like. I know what I believe it's going to look like. And then we always go to the consumer. What do you think? And our job as advisors should just help them make decisions. And we should put in best cases that families think. And then we should also put in worst cases that people think and just help them make a better decision. Our job should be to provide informed decisions and help people get clear so they can go from confusion to clarity. And so that's all. I think it was in the Wall Street Journal where they were really picking on the industry about the whole date the rate, marry the home. And I thought it was pretty warranted. I got it. And I know the nuance because I know some really good loan officers that have that conversation with a lot of curiosity, empathy, and do it right. And I know that I probably know a lot less loan officers that don't do it with curiosity and empathy. But getting back to where we're at in spring home buying season, I think the industry, if we can be data driven and then help families make that choice in a data driven way. Again, I have to do it because I'm the guy who founded Mortgage Coach, but I do not think here's your rate, here's your payment, and here's your cash to close is enough data for a consumer to make an educated decision. I think they need options. I think they should be looking at, this is what they're at today. I think Optimal Blue Mortgage Market Index is 6.6 today for jumbos today. That's in our Rate Watch app. And I do believe they will probably go for sure into the 5s and possibly into the 4s. And that should just be a conversation. It should be something that's considered.
Are you talking to loan originators how to tie out that rate conversation with what happens in inventory and the supply demand equilibrium? So with this will drop, we're recording this on Friday. This will drop next Thursday. So this past week's data from Altos Research is showing 414,000 single family homes on the market. That is more than we had in 2022 and 2021. But we're still significantly below. So this same week in 2017, looks like we're about 820, 815, 2019 around that 800 level, 2018 just below 800,000 homes in the market. So we're like half the inventory that we've seen in our more recent phases of market health. Now, I think one of the things that's doesn't scare the mortgage people, doesn't scare the real estate people, scares the housing economics people is what happens if rates do trickle back down into the 5s and God forbid the 4s, and we have 414,000 houses on the market. And what does that do to HPI? What does that do to competitive scenarios? And I have some of my favorite, I love following the loan originator accounts. I like seeing how they translate the information and news that we're covering into advice for their clients. But I think I'm seeing some good advice that like if we do see rates come down, like we're going to be back in that scenario that we were in 2021, where homes are going over ask and we're in like multiple offer competitive bidding wars.
Yeah, they're going to be doing the how to win. I mean, like, again, I built my career on the tagline that my advice makes a difference. As an originator, and I've really spent my whole adult life as an entrepreneur just trying to be that guy whose advice makes a difference, and it always changes. Like in this market, it is helping people make that data-driven decision based off of the likely scenario you painted, and then when it curves, there'll be a different piece of advice. And so, kind of getting back to like have a playbook, have strategies. Like if you're listening to this and you're an executive at a mortgage company, make sure you've got your, your tech stack, your model. Do you have a playbook? And then are you training your loan officers on how to gain market share and how to win in this market right now? And if you don't have a playbook, then I think that's not the right answer. Like have a playbook and do training around it.
Dave, we talked so much in this podcast, the Housing News podcast series, about the bifurcation of performance, the bifurcation of lenders. And this episode, we brought in the haves and the have-nots concept. And I think it's really important, not just to talk about there are going to be some winners and losers, but talk about the tactics that will help create the winners and give people a fighting chance at being on the right side of this market. Dave, can't thank you enough for joining us today, sharing your expertise, giving us another glimpse behind the scenes of what you and your team and your partners and the new executive team at TrustEngine are building. I'm so excited for you guys.
Well, I love what you are doing. I love the platform you've built for all of housing, not just mortgage, but real estate, in all categories. So thank you for everything you do. I'd love to be part of what you're doing.
Calling all mortgage, title, and insurance leaders. With interest rates shutting down your refinance business, your relationship with your real estate partners is more important than ever. HW Media wants to help you deepen relationships and find success in this competitive purchase market by inviting you to attend Gathering of Eagles. Real Trends Gathering of Eagles is the real estate industry's premier event, bringing together leaders from the most successful brokerages in the country. For the first time ever, this closed event is open to our full audience. Check out the show notes to find out more, or head over to realtrends.com to purchase your ticket today.
Bam. Now that is a wrap of this week's episode of the Housing News Podcast. Do me a huge favor and go to iTunes and rate this show. And if you leave a comment, you better tune in next week because you might get a shout out. Thank you.